Hey, what's up everyone? Gen X guy here. Just want to take a minute to say thanks to everyone who's subscribed to the channel, liked the videos. I appreciate that. It's starting to get a little traction on the channel. I guess the persistence is paying off, and I appreciate that. Getting these things started, from what I understand, is not the easiest thing to do. So all the help is appreciated. So please subscribe to the channel if you're new here. Like the video, would be greatly appreciated. So today I wanted to talk about are we in a stock market bubble? The video I posted yesterday was about why I only invest in high-risk assets, and so today I thought I'd answer the question, are we in a stock market bubble? And what prompted this discussion was I was watching yesterday evening. I was watching a video of a guy that's he's a financial guy. I'm watching a video on YouTube, and I really like his channel, and he was warning everyone that, you know, to be ready, that he thinks that we're about to have a collapse. And anything can happen, right? Anything's possible, but is it probable, right? That's the question. When it comes to investing, we really have to take probability into account, and I'm not so sure we are, and I'll explain in the video. He gives some reasons why he thinks we're in a bubble, and that's about to burst, and that he thinks we're going to have a collapse. Now, what does that mean? You know, does that mean a total absolute zero? I doubt that. I doubt he even thinks that. Does that mean some sort of pullback? I mean, and then there's everything in between. He talks about the S&P 500 and just doing some simple metrics and looking at the PE ratio. And you know, PE ratio is the price to earnings ratio, and what that price to earnings ratio, what that means is that's a stock valuation metric that compares a company's current share price to its earnings per share, and it tells investors how much they're paying for each dollar of earnings. And so what you can do is you can take the S&P 500, and the S&P 500 is basically an index of the top of 500 stocks, and that's an index out there on the stock market, and I think most of you are probably familiar with that. But if you look at the PE ratio of the S&P 500, historically it's been around 15 to 18, which is considered healthy when you just kind of look at it from a holistic perspective. And he makes the argument that right now we're in the mid to upper 20s PE ratio, which is high, and it is high when you look at it from a historical basis. Now, okay, so great, it's high. What does that mean? So what do we do with that? If you didn't know this, and a lot of people don't, is about a third, 35% of the S&P 500 is dominated by 7 stocks, 7 companies, and those 7 companies are what have been named the Magnificent Seven. And those companies are Amazon, Alphabet, Meta, Microsoft, Nvidia, and Tesla. Those companies hold a massive chunk of the S&P 500, 35% to be exact. And so there's a lot of concentration there. And so what's common about all 7 of those Magnificent 7 companies? They're all tech stocks, and they're all big tech stocks. And so he's making the argument that we are very tech heavy. That is correct, that we are tech heavy. And if you watch my video the other day, technology always wins, there's a reason for that. Tech's not big because it's because there's demand. There's people buying products and companies using tech, and there's a high demand for it. So that's the reason why that's there, and people are investing in tech big time because of that. So, and as I discussed the other day, you know, we all know that the Fed, Jerome Powell, is he's probably going to drop the Fed rate down 25 basis points or a quarter point. And everybody knows that's coming on Wednesday. And so, and we talked about what that means as far as if you got money in a money market, it just means you're going to earn less yield, less return on your money in the money market fund. And so, and he believes, this other guy on YouTube, he believes that we could have a sell-off event when that happens. Maybe, maybe not. I tend to believe you may, and you know, I don't have a crystal ball. I mean, this is investing. I mean, we can't predict the future. We just kind of go with the probabilities, right? And go with trends and how things are, you know, what is the kind of the feel, you know, what's the general consensus? What, are we in a bullish trend? What's the trend? Are we in a bullish trend or are we in a bearish trend? I think we're in a bullish trend. So I think maybe large cap stocks, your large companies, they may pull back. And he makes the argument too that this 25 basis point rate cut is priced in. Maybe. I think some of the run up we've had lately is pricing it in, but does that mean that just because it's priced in before that date that it's over? I don't necessarily think so. I tend to believe that small to mid cap, when I say cap, small to mid capitalization, meaning their market cap, your smaller new type technology companies, I think you're going to see a lot of money run to those assets. Cryptocurrency, I think you're starting to see money flow down from Bitcoin into Ethereum, into a Solana, into Chainlink, some of the large caps, and it'll continue to flow down into some of the smaller caps as we into more high risk as time moves on. So he's making the case that we could see a sell-off event. And then he goes on to talk about the job and housing market's not good. If you've been halfway paying attention to the news, you know, we just had a revision of 1 million jobs that were actually we lost, that weren't accounted for. And so the job market is not as good as that we've been led to believe. And then the housing market's not good either. The houses are sitting now. I don't know if you guys are familiar with Nick Gurley Reventure app. I follow him. He's great. He's got a great app that you can go check out, and I follow him and keep up with him on the and I'm, you know, as you all know, I've told you I'm in real estate. Been in that for 20 years. So yeah, real estate, there's stuff sitting on the market. You know, buyers are hung up right now. They're wanting to let the market come down, and stuff sitting, inventory sitting. So you're going to start seeing that housing and unemployment come down. Now, is it going to be catastrophic down? I don't think so. I really don't at all. He thinks, this YouTuber, he thinks that the stock market is climbing on hope. Maybe, but I don't think it is. He compares the current, the tech, and all this boom in tech in the stock market, he compares it to 2000. No, this is nowhere close to 2000. I was in tech in 2000. That was a whole different ball game than we're talking about now. In 2000, this was ideas on a napkin that were getting millions, hundreds of millions of dollars in VC capital poured into them. I was there. I was part of companies that were beneficiaries of that, and I was part of companies that I got laid off from because they ran out of money. So Webvan was a great example. Spent hundreds of millions of dollars on warehouses, maybe in the billions if my memory serves me correct, buying trucks, box trucks for grocery delivery. Lots of businesses, pet supply delivery. I think pets.com. There were just tons of them that started, and it was just not, the market just wasn't ready for that at the time. And we saw huge it's just bust. They couldn't produce the numbers to justify their valuations, so we had a big bust. That's not the case now. You're talking about Apple, massive cash on hand, products all over the place. People buy those products like crazy. You're talking Tesla, products people are buying. These are real products in real people's driveways and in their hands. Microsoft, software company, been around forever, operating systems all over the world. The largest Windows. I mean, it's everywhere. This isn't stuff that's written on a napkin. Meta, Facebook, Instagram, billions of people using that stuff. That's not ideas on a napkin that's just going to bust overnight. Nvidia, the largest company in the world, worth over $4 trillion, that builds GPUs for AI and mining for Bitcoin and such. So huge processing power, and they're breaking records they're showing real numbers here. This isn't just pie in the sky. So comparing now tech to 2000 tech, not even a comparison, it's not even worth talking about. And so these are solid tech companies now. Those were ideas that VC just ran to, and I hope they learned a lesson. I think they have from that. Of course, you're going to always have startups that never make it. So he also believes that the stock market's expensive. But is it? Is it expensive? And this is what I believe is going on. Do you realize that 80% of the money that's in circulation right now was created since 2020? 80% of the money that's in circulation since 2020 has come about since 2020. That's unbelievable. So what's that mean? Well, when you pump that much money into the system, that money goes somewhere. And where it ends up going is it works its way up the ladder, climbs its way up the ladder, and eventually it works its way into the market. Equities, crypto, it works its way into investments, okay? And why does it do that? Because, and especially when you mix it with inflation, the money's trying to outpace the cost of money, which is effectively the inflation that we're getting hit with. And so when you print trillions of dollars, at one point it was 7 trillion, it's much more than that now. That money, people took that money, especially when we're writing all these checks that went out, a lot of that money went in the market. So the markets are propped up by all that capital, all that money that the Fed printed and basically injected into the system. And so you're almost seeing like it's all relative, right? The market is like money printed adjusted, if you will, where if they hadn't have printed the money, the numbers would be much lower, but we would probably still see the relative percent growth, if that makes sense. So I think a lot of it's propped up by all of this money. And then you take in the account that I talked about the other day, that there's $7.3 trillion in money market funds. It's sitting on the sidelines. It's just sitting there. It's waiting to come in, especially when these rates, you lower a quarter point, and then we get into November, October, November, you go another quarter point, and if the jobs and housing gets worse, it could be half point. I don't think anybody's thinking Wednesday I think there are some people thinking half, but that's not going to happen. It's going to be 25 basis points. You can pretty much guarantee it. I'd be shocked. If it's 50 basis points, y'all better hold on. The markets are going to boom. And a lot of that money is going to really pile in to, guess what? High-risk assets. Because it's going to chase yield. It wants the yield, and you're not going to get it. If they're cutting half a point or 50 basis points, you just cut that yield. So that's my... So are we going to have a bust, to answer the question? I don't think so. I really don't. I think we're going to have pullbacks, and we've had them. We had a pullback earlier this year. I think we're going to have pullbacks. Now, this is granted we don't have a black swan event. If we have a pandemic or something like that happen again, or something big break out, or a war, anything that's just that's what a black swan event, something that's just kind of unexpected. Sure, but will we have a full-out collapse? I don't think we didn't even have that during the pandemic. Yeah, we had a massive drawdown, but we didn't have a complete and utter collapse. So I think now with there's so much capital out there, I think you're going to see pullbacks, yes. And it's be curious to see what these earnings look like in the months ahead. But these companies are still showing strong earnings. And yeah, are the PE ratios high? Yeah, are people overvaluing these companies? I guess you could say so, right? But hey, the companies are performing, and they seem to keep performing because money keeps buying. There's so much money out there that its purchasing power is still there. It's just buying. The money is flowing and moving, and as long as it's doing that, it's just a good thing. So I think we'll see drawbacks. I think we'll see, events, current events, and regional things that happen. Maybe just not even in the United States. I remember when the Russia-Ukraine war, that spooked the stock market, but it recovered. Tariffs. We had the tariffs. We had a drawdown then. So I think you'll see these little mini drawdowns. And look, people thought the tariffs were going to cause all this inflation. Hasn't happened. The tariffs haven't done anything anything meaningful to inflation. All the analysts were, oh, it's just a tax. Tariffs are a tax. Where is it? It hasn't really happened. Inflation is still a little sticky. It hasn't gone down to 2, and I'm not so sure it's ever going to get to 2 at this point. There's just too much money in the system, and quite frankly, I'll be honest with you, I'm shocked that we're where we're at 3, with all the money that's out there and all the buying power that money provides. It blows my mind that we're not even that we're not high and still high. And someone would say, well, it's right because they left rates higher for longer. Maybe, could be. And again, I'm not a financial expert by any means. I'm just a Gen X guy who's been around a while and done a lot of thinking on this stuff. So, and again, this isn't financial advice. This is just, an old guy running his mouth, trying to help others out. And if I can do that, great. But anyway, that's all for today. Just wanted to tell you that I don't think we're going to have a stock market bust, like, here we go, 0. No, I don't even think we're going to get a half bust. The probabilities and the trends just don't show that. And I stare at this stuff every day. So drawdowns, yeah, sure. Bad days, sure. And you should probably have some cash on the side to be able to take advantage of the dips. And we'll talk more about that strategy at another time. But anyway, another good day here in Tennessee, and glad you're watching my stuff. I'll keep it coming. Thank you for subscribing and liking, and if you would subscribe now down below, like this video, and leave a comment. Let me know if you like it, any feedback. I'd appreciate it. Have a good day. Gen X guy out. See ya. Bye.